Hi, everyone. Welcome to today's webinar, Consumers Are Taking Control, How FIs Can Compete in the Era of Curated Financial Services. Our focus today is to share with you new consumer market research conducted by Datos Insights in collaboration with Galileo Financial Technologies. And here today, we're going to be covering key insights about how consumer banking behaviors are changing and the impact that has for institutions that don't evolve along with them. So please, during the course of this conversation, feel free to not only use this data to inform your own growth plans and market strategies, but also to help improve visibility into how these trends are impacting or unfolding within your own customer base. So let's get started. My name is Deanna Ermini. I'm the head of the FI segment at Galileo, and joining me today are two friends of mine. Michael, over to you.
Thanks, Deanna. Hi, everyone. Welcome to the session. My name is Michael Grillo. I'm head of product marketing at Galileo Financial Technologies, and happy to be here today and talking about the data. David.
Yes, thank you. And thank you, Deanna. Thank you, Michael. Thank you to Galileo for inviting me to present some of the findings from our latest research. I'm David Albertazzi, and I'm the director of Datos Insights, retail banking and payments practice.
Great. So for today's discussion, we're focusing on 5 topic areas. 1, what people consider as their primary FI. 2, their financial trends by generation. 3, what people think about their primary FI. 4, the diversification of FS. And 5, challenges and opportunities. So here, David, could you share details about the survey parameters that were used to capture this consumer data?
Sure. Before I do that, let me frame this a little bit for our audience here. So, as we are about to enter the second half of 2024, I think across the industry, we're seeing a sea of change. Financial institutions face many challenges, and they're pressured to balance stability while keeping growth in mind. And they also have to manage evolving consumer expectation from Gen Zers to boomers and keep up with technological advances, which is going to be the core of our topic. And so let me frame the research for you guys. The research is based on a study, Datos Insights, conducted in Q1 of 2024 of 2,500 consumers in the US. Those qualified to participate in the study have a relationship with a financial institution. The profile of the sample is in proportion of the US population in terms of gender, age, income, geographic region, and race. So here, we first ask consumers who they consider to be their primary financial services provider, meaning the provider that they use to manage most of their day-to-day finances. And so the big 4 represent the top 4 banks by asset size. So Bank of America, Citi, JP Morgan Chase, and Wells Fargo. Super regional banks are institutions greater than 100 billion in assets, of course, excluding the big 4 we just talked about. Regional banks with assets from 10 billion to 100 billion. And then digital-only banks are those neobanks that do not operate a branch network. So the research shows that the big 4 still have the lion's share, 38% of the consumer market, while the rest is spread amongst other banks, credit unions, and digital-only banks, like 19% for super regional, 14% for credit unions, 13% for community bank, 7% for regional bank, and 6% for digital-only bank. I think one characteristics that we should put out there is that the average banked US consumers has 14 accounts held across 4 financial services companies as an average, right? So there's no doubt that banking is very competitive with over 8,500 institutions in the US, right? What's not on this chart, but what's also very interesting is that 66% of Gen Z primarily bank at a big four or super regional bank, while older millennials and Gen Xers are the biggest users of digital-only banks. Back to you, Diana.
Thanks for that. Thanks for that structure and for giving us, it sets the foundation for the rest of the discussion. So this is super important. So thank you for doing that. While we have the landscape of the banking industry here based on the survey that we conducted, let's take it over to what trends we're seeing across the generations. So clearly there's digital adoption happening across all generations. And Mike, I'd love to hear from you, your insights on what these trends are uncovering based on what we uncovered with the survey itself.
Yeah, sure, Deanna. So, I think if we look at the different demographics that came through in the survey, Gen Z, surprisingly to me, are using traditional banks as their primary financial institution, and surprisingly using the big four. I think what the banks need to think about with this audience is the older Gen Zs, as they start to come into their own, start making more money, if they are using multiple numbers of financial tools, they need to think about how can they focus more effort on bringing more of that Gen Z audience to them, consolidate them through some of the opportunities that they want to put out there. On the millennial side of things, they think and act like Gen Z and Gen X. And we think maybe some of that may be due to the fact that they're following in their parents' footsteps. So if millennials are the generation underneath Gen X, they may be following and learning and doing some of their banking and financial services activities similar to the Gen Xers. What was interesting about this group is when we asked about virtual assistants, 42% of them had conducted a financial activity through a virtual assistant device, more than any other generation. So they're definitely out there trying and testing new digital technologies. So that's something to think about as you put together your plans for focusing on the millennials. For Gen X, the audience or the demographic that's typically overlooked, they are currently moving into the biggest recipient of the transfer of wealth from the baby boomers. And so it's going to have a big impact on where and how they want to use their money, how they want to access it, how they want to engage with it. So I think that's something the banks and financial institutions need to think about as they think about the services and how they support these guys. And then the baby boomers are, they account for 1/4 of all consumer spend. They really are doing their job to keep the economy running. Those that are in the baby boomer area now own 74% of investable assets. So there's a lot of opportunity still with this group, and again, we need to, as an industry, think about how they're being served and how that money is going to get passed down to Gen X. So there's some very interesting trends that will continue to come out as we look through this data in the survey.
And just as a note to that, Michael, I would say, I think it's fun to see how the adoption of digital use is proliferating across the generations. It's not like this assumption that, oh, I'm a baby boomer, I'm not using this technology. They are, and we'll get into that more in the course of the discussion. But one anecdote that I'd like to share, which is kind of fun, is that, my mom she's 81, and she was so fixed on her flip phone. And when it broke and she couldn't buy a new one, she was freaking out, right? So we had to get her a smartphone. And it was fun to see my 10-year-old really teaching her how to use the technology and how she's using it today to make phone calls primarily. Texting is still a work in progress, but just seeing that transfer of technology adoption and how that's going to, that's organically happening. And that, clearly the digital innovation is hitting every generation. I think that's a powerful, more than we think, especially for the older crowd. So with that, David, in addition to the trends that Michael just noted across the generations in the survey, showed that consumers overall, they're pretty satisfied with their primary FI. And I would love for your thoughts around the key factors around this.
Yeah, look, I mean, the great news, right, is that consumer satisfaction towards their primary FI is quite high, as you can see here, right? If we think about what consumers are telling us, right, I think, people core needs don't necessarily change, right? When asked about selecting their primary FI, most consumers would state that trust is very important or extremely important to them, right? So, and the good news is that the banking industry, over time has been built on trust, right? Safety and soundness, those kinds of concepts. So, uh, consumers generally feel their needs are being met and report positive experiences and helpfulness from their primary FI. Um, I think what I love to remind our audience is, especially those financial institutions, is about the concept of TFA, right? Trusted financial advisors for your customers, right? It's the know me, protect me, look out for me, that concept, right? It's about knowing your customers, understanding their unique needs, financial situation, and goals. It's about protecting them, prioritizing their financial well-being, at the same time kind of safeguarding their assets, and finally looking out for them, right, and providing them proactive guidance so that ultimately over time they can achieve their financial goals. So finally, I think this is an interesting data point, is that a small but notable percentage of customers um, remain neutral or dissatisfied, uh, uh, really indicating room for service enhancements. There's no questions that consumer expectations regarding banking services are on the rise, and it raises the bar for delivering any type of banking services and products. So I think now we can look at the gaps that we're seeing. While satisfaction is high, what those gaps might be.
Yeah, I think, interestingly, on top of that is like, although consumers are generally satisfied with their primary FI and what it has to offer, the data shows that there's still these gaps, right? So between what the customers need and want from their FI versus what their FI can and does provide. So Michael, from a product perspective, what does this mean for FIs?
Yeah, so I think, if we kind of look at some of the numbers here, for the 22% that don't think that their primary FI is meeting their needs, there's an opportunity for the FIs to do more in terms of regularly conducting surveys and focus groups, whether that's at the close of a transaction or whether that's, through a periodic touch point to better cater to the customer needs, the diverse customer needs. For the 33% that don't agree that the FI understands them or needs to offer personalized service, this is an opportunity for the FIs to really delve into the data that they have in-house and to really gain insights and knowledge around the types of offerings they can put together, whether it's personalized financial advice, or other specified personalized services. There's a lot of information in the data, in the transactional data, that we think that the FIs can take advantage of to close that gap. For the 40% who don't agree with their primary FI that it's cutting edge, this is a big sticking point and conversation piece in terms of when it comes down to product functionality and evaluating the gaps. FIs really need to invest in digital innovation and enhance the digital banking platform, collaborating with the fintechs that are out there that offer these types of innovative services. I think what we see that with a number of our demographics going to different people for different types of services, it's really that digital first approach that is luring over some of those customers. So, we think that's important for the FIs to think about from their tech stack. I think, in regards to the incentives and rewards and enhancing the digital channels, there's an opportunity to align rewards with customer preferences, personalized incentives based on behavior. And, this whole idea around AI-driven chatbots and personalized notifications can really be a proactive way to provide timely information and relevant insight and advice when the customer is looking for it. So, even though the gaps exist, there's certainly opportunities to, address them. David, your thoughts here?
Michael, yeah, I would add to that, if you think back in the past, banks kind of knew once a primary banking relationship was established, it was unlikely to change, right? And their efforts then were focused on acquiring, net new customers. I think the rise of digital banking had kind of changed that landscape, right? A frictionless account opening experience is a little bit of a double-edged sword for the banking industry. It makes acquiring new customers a lot easier, but it's also easier for consumers to essentially leave their bank, right? So also, I think a growing share of wallet is difficult if you have such a high percentage of customers who don't agree that they're understood by their FI, that their FI is not cutting edge, that does not offer attractive rewards and incentives and offer timely advice, as you mentioned, right? So financial institutions are under increased pressure to meet changing market and customer demands. Continuing investments in technology, I think, is critical to keeping up and remaining competitive. And it's really about evolving with the needs of your customers at their time of need. When I look at all those gaps, what my recommendations to those FIs on the call would be some simple things. So first of all, developing guided digital flows, right, that lead consumers through an application process step by step, right, ensuring that they understand each requirement and the steps that are involved. Maybe considering on-demand chat and video consultations, providing personalized assistance without them requiring to visit a physical location. Launching AI-powered personalized recommendations to provide like something that's really tailored and insights based on an individual's financial situation and preferences. This would kind of help them guide that person toward the best solution that fits their needs. And last but not least, and we saw that actually during the pandemic, and it's very little technology is required there, is developing customer education and resources. Think of FAQs, how to do guides, and interactive tools that can help consumers make the right choices.
Yeah, some of that plays into that self-service, letting them engage how they want to engage.
That's right. That's right.
It's, given that this survey is fresh off the press, really, we just did this a few months ago. I mean, these are big numbers, right, that your customers are saying today. So really view this as a level of opportunity, multiple opportunities that you can take advantage of to increase that engagement with your customer base. So we've got, among among these satisfied customers, the status of primary doesn't mean what it used to, right? So here, just because there's such a plethora of choice now, right? There's more providers, there's more apps, right? So here we see how consumers are using specific financial tools and services across all age groups. Customers are curating their own suite of financial services, both within their primary FI and outside of it. So I think this is really an interesting chart of information. And I would love, David, your thoughts on this impact and this evolution and how people are engaging and focusing on their money movement.
Yeah, this is an important point, Diana. I actually love this chart as well. I think the industry is at an inflection point, right? Digital experiences are being shaped by other industries, and that's actually putting pressure on financial institutions to build relevant banking experiences. Um, I think the financial institutions that win consumers will be the ones that invest in creating those very engaging digital experiences with the tools, and we'll get into more detail on that, but the tools that allow consumers to take control of their finances. We know that consumers generally are focused on debt reduction, right? Reducing debt is actually the leading goal, not in the tools, but in terms of what are they trying to achieve, right? So in terms of the goal, it's 44% of bank consumers are attempting to reduce debt. 41% of consumers also have the goal of building an emergency fund, right? We also know that savings are thin. Approximately 50% of banked consumers have less than $10,000 in savings, and more than a quarter have less than 2,000. That's big. And then, therefore, providing a variety of financial tools is very important. And we also know that younger generations are embracing financial tools. Consumers average for those financial tools is 4.7 consumers use 4.7 financial services and tools. But then Gen Z use an average of 6.3 tools, millennials an average of 6.6. It decreases as we go up in age. But I think that's a extremely important point here, is that those tools are welcomed by customers of those institutions.
Yeah, I think I would add to that, David. If you think of all the options that are out there, and based on the numbers that you just said with, the different demographics using the multiples of tools and or financial providers that are doing that. We at Galileo, we think of customer acquisition, not only in terms of, how do you get the customer onboarded and using your tools day one, your services day one, but then how can you continue to grow them and activate them? So, and that plays out into a lot of what we saw in the responses here. Again, with that digital first approach, making mobile wallets, very easy, digital cards, so that they can use them, via the mobile phone. Thinking about, bill pay and secured credit, early wage access, just providing the ability to get access to your payment, your payroll, a couple of days earlier can make the big difference in a lot of people's lives today. Thinking about holistic family banking with parent-teen options. So, it's one thing to have, either a good interest rate that gets them to you, but then how are you going to continue to build and grow that customer base? So, you need to think holistically about, the options that you're going to offer to those consumers in all of these categories.
I think this is really, I love this part. This is like geeking me out right now. I think this level of detail is it's just so telling, right? So we've got these interesting data points, surveys, and we show that on average, Gen Z and millennials use more than 6 financial tools and services. And they're using more than half of those tools outside of their primary FI. So that's wild to me. And that just shows how the opportunities, the providers, the apps that are proliferating in the market are addressing these specific needs across these generational groups. So David, when you dig into this, what are you increasingly seeing as providers outside that, these consumers using providers outside of their FI, their
Well,
primary?
hey, yeah, let me double click on a point I made earlier, which is that, banking is competitive, right? Consumers have multiple FI relationship, actually, despite age, right? And to carry out their financial lives, the average US bank consumers has 4 financial relationships, right? And by the way, that's why we call it financial services company, right? Because the relationships includes banks, credit unions, brokerages, credit card companies, P2P payments providers, right? So this number actually changes very little across generation, negating the theory that consumers accumulate more relationship as they age. So across all generations and providers, consumers are using at least two key financial tools or services outside of their primary FI to meet their needs. And the data, what's actually more troubling is that customers are using other FIs for key financial services, even when their primary FI offer that same service. So it's no surprise that, as you can see here, almost half of 45% of consumers who hold funds with a secondary provider do so in an investment account, or that 29% are seeking a better interest rates in the current market, right? So as digitally enabled FIs put highly relevant financial services right at the customer's point of need, they actually make it increasingly easy for customers to choose their own suite of financial services providers. So essentially, consumers seek control and they prefer to architect their own banking suite, right? So the challenge for most FIs is that, being at that point of need requires data that can be used to create a nimble, timely, almost kind of hyper-personalized experience. And I think we're going to talk a little bit more about data here in a minute.
Sounds good. Yeah, I think the only thing I would add here is that I think the what you think about your audiences and the demographics isn't always the case. So I think these types of survey touch points really give our audiences something to think about as they work through their strategic plans and building out customer bases. So this continues to be good stuff.
And I would think too, I think, David, you hit it on the head as far as like, if it's fast and easy, it's convenient, and I'm getting the service I need, and it's not with my primary, guess what I'm going to do? I'm going to go the road of least resistance. So very telling in the stats here in that regard. So it makes sense to see that, how people are going outside of their primary FI, because it's really saying, I can get it faster, better, easier over here. So, we want to maximize, I hear this term all the time, customer lifetime value. But I like to say, better yet, life stage value, right? Where is your customer in their life journey, right? Are they buying a house? Are they going to college? Are they planning for retirement? And how is your FI delivering on that life stage your customer is in? So it's really it's really understanding where they are and then delivering it to them in that time of need, right? So that data-driven approach, if you have like a FI that's data-driven, you can insert yourself in a positive way in the evolving needs of the customer's lifestyle. And it can help slow or stem the adoption of competitive products, right? If you can successfully do that faster, cheaper, easier, right? How do you do that? It's that age-old personalization. How do you delivering those personalized experiences and offers? So, if an FI uses customer data to identify when a customer is likely needs a loan, such as after a major purchase or during a life event like a wedding or a home renovation, as a financial institution, you can send personalized loan offers with tailored interest rates and terms that match the customer's financial needs, right? The FI could do that by using machine learning algorithms that are analyzing those patterns in life events to predict the loan needs and customize offers. Another example could be a bank personalizes credit card rewards based on the customer's spending habits, or offers higher cashback or rewards points for categories where the customer is spending the most, right? And my credit card does that. I love it because it gives me guidance. It gives me value. I'm not even asking for the information, it's providing to me proactively. And that makes a huge difference in the customer engagement element. David, what are your thoughts on that data-based driven approach that defend against the digital first challenger?
Yeah, so in a way, this research really serves as kind of a market snapshot, right, of what FI customers, consumers in general want, and how they tend to bank and behave when it comes to their financial services. But look, financial institutions have the data. I think the most of them have trouble consuming that data and actually turning the data into insights, both for DFI themselves, right, for the financial institutions, but also for their customers. And so, customers are willing to give data for something in return. In fact, 83% of consumers are willing to share the data to create a more personalized experience for them. So that's a big plus there. Overall, I think financial institutions must rethink and adapt their approach to delivering data-driven customer services. It's especially becoming important as the financial industry is shifting toward collaborative ecosystems, where third-party providers are going to play crucial roles in fostering innovation for improved customer experiences and services. And I think, look, this is probably a separate discussion altogether, but through regulation like Rule 1033 from the CFPB, there's actually a growing emphasis on consumer control over their data and the portability of their data. So I think at the end of the day, it's almost a data story, and then it's the data fuels the insights in order to generate better interactions.
Yeah, I think I would, great points, David. I think I would, add just a couple of thoughts there too. I think the technology, the tech stack has to allow for the data to be used, in a more simplified way. If you're still dealing with silos of information, it's going to be challenging to put that all together to create those types of predictive offers or, meeting the customer. So I think from a technology and platform and tech stack solution, the banks and FIs need to think about that. Certainly, the comments about, customer concern with data is important, but there are still opportunities for, through mobile apps for, to engage end consumers to give feedback very easily, on how their experience is, how the user design is, et cetera, et cetera. So those are good data points that could be coming in real time. I think the other area that, is worth mentioning is customer protection, data and fraud analytics, and, using machine learning and AI to, ensure that David and Diana are transacting as David and Diana typically do, and making them aware, when something goes wrong. Those types of there's a lot of data that comes in that can be analyzed from a fraud management or risk management perspective. So thinking about those types of tools as well, although it's not overt to the customer always, what happens in the background, or as we say, under the glass, is just as important sometimes as what happens, on the phone or on top of the glass. So a lot of the technology considerations there as well.
So, it's not surprising that customers want to be met in their time of need through their preferred channel. So it's online, via an app, or in person. But these days, rarely over the phone. Who says they want to, oh, I'm so excited to call my bank because I have a question or I have an issue? No one says that, right? So in fact, more people, like a third, they still go to a branch monthly than call customer service, which is like only 16%. So it's clear there are many needs that still aren't met, right? They can't be met or they aren't met. They're online or via an app. And that, just like signing documents or notarizing documents, you can't do that over an app, right? So at the same time, customers are pushing you to go in that direction, to be more digitally inclined, to provide those online services. Michael, well, I'm going to pass it over to you because there's some interesting findings here.
Yeah, I mean, I think what some of this is telling us is that you need to be ready for all scenarios. You need to meet the customer where they want to be met. You know, in some cases, they, at least as you said, at least a third of and customers still want that in-person experience. So that's important if that's part of your strategy. If you're, not in that non-branch environment. You need to think about how they're going to engage with you otherwise, whether it's through, um, an AI-driven chatbot or through an IVR or some other service. Um, and then again, this goes back to what we always talk about at Galileo, which is this, digital first approach, making sure that they have the ability to easily access their information and their financial services online through the mobile app. The user experience is positive. And, because more and more people are just using these tools that are basically fused into their hands these days. So that's something to be considered. David, any
If I,
thoughts on that?
yeah, if I can add to that, Michael, I think while consumers use every communication channels to interact with what did we say, four financial services companies, right? With which they have a relationship. There are clearly some favorite methods of interaction. Today, smartphones are the most heavily used channel by consumers ahead of online. Um, so that's one point. And I think the other point is that instant fulfillment is expected from consumers, whether it's real-time funds availability with bill pay or instantly issuing a debit card when an account is open online or in the branch, doesn't matter, right? But there's a certain level of expectations there. When talking about an integrated multi-channel experience, which by the way, we've been talking about this for quite some time in our industry, we're really talking about a seamless customer experience, right? For most financial institutions, and I'm glad you brought this up, Michael, a couple of times already. The idea is to build a digital first, really, versus digital only strategy, right? So the customer experience is consistent across channels and transactions, and then transactions can be carried over, continued from one channel to the other seamlessly. So, digital first versus digital only strategy. Consumers continue to use all channels for various reasons. And actually, no one channel has captured it all, right? So not only it's necessary to create a seamless experience, and by that I mean like no gap in service or quality. It's not bankers love to talk about channels, but consumers really interact with just a brand, one single brand, right? And so if I should be working towards really the concept of a personalized experience, right? So it's seamless experience, yes, but it's also one that is personalized. And so, over and over, I think consumer expectations are being set by other industry that capture data and use it to deliver, timely and personal offers when consumers want it. And I think we're going to move on now to talk a little bit about this concept of do-it-yourself banking, which I love.
Yes. And so clearly omni-channel, like having that seamlessness between channels, David, that you're talking about, it's hard, right? No one has nailed it. No one's nailed it yet, right? So it's still a work in progress. It's still, your customers don't want to talk to you. They want to embrace this DIY service model. And here on the slide, it's saying 60% of people said they prefer to do everything without human interaction, but many banks have not made enough of their services digitally available. So even though we've got traditional and digital first banks have made it easier to open accounts, you still can't do everything in one app. Do you have thoughts
Yeah,
on
yeah, I do. I think in this example, right, consumers were asked the extent to which they simply want companies to provide them the tools that they need to take care of their financial needs, right? And many consumers, uh, particularly the younger ones, feel strongly about this issue, right? More than a quarter of the Gen Zers and millennials strongly agree with the desire for DIY banking, and 60% of consumers overall agree that it is what they want, right? So there is no question there. And so it's almost, when I think about this, I think to a certain extent until now, a lot of people have benefited from the same technology innovation, have not, sorry, benefited from the same technology innovation in banking than they have in other parts of their lives, right? So I truly believe this is changing. Technology and digital are definitely reshaping how banks need to engage with their customers. And we're already seeing improvements both in the front office and back office capabilities, like real time is an example of that. And that's really, all of this is aiming as changing the service model.
So, while, many do prefer everything without human intervention, there's this increasing number of consumers that are turning to virtual assistants to conduct a financial activity. To me, this was not a surprise, right? Because look, if I can get my answer fast and easy, which is the cornerstone of anything, to advance, right, is this embracing of the virtual assistant. And what is interesting here is that adoption across the generations. So Michael, what's your point of view on this?
Yeah, yeah. Excellent point, Deanna. I think, it's not surprising that people are using virtual assistants, but I think it's the level at which, or the intelligent level of which, the assistants are available today. So, you think about the younger millennials, the 42% there. They're, they're really moving and grooving here, but a lot of banks today and financial institutions are still using those legacy chatbots that really can't anticipate or solve complex, needs. So, it's one thing to have a decision tree that says yes, no, if then, but there's also opportunity to allow the end customer to finish a transaction, to do a transaction, for the chat scenario, to anticipate what does Deanna need. Should I be sending her more information about her loan payment that's coming up? She's asking me about an account inquiry right now on her checking account, but I know her loan is coming due soon. Does she need any support with that? So, there's this idea of making sure that there's intelligent ways. These virtual assistants are intelligent in the background, and can anticipate these types of things. And also, thinking about other ways that they might want to do it through. Maybe it's not just the virtual assistant. Maybe it's through the mobile device, or the digital online experience. But really thinking about all of the services that need to connect and anticipate the customer's needs or wants, not just answer the one question that they're coming in. So really, thinking about leveling up to intelligent digital assistants can really make a difference here in terms of the adoption and getting some of those, older baby boomers and seniors and younger baby boomers to, get more in the game here and start interacting. Because again, it becomes another sticky point for, all of meeting the client where they are and what they need.
Regardless of generation.
Exactly.
Exactly, right? So we've covered a lot of interesting data findings so far. So let's switch gears and discuss the primary challenges and opportunities FIs have based on these findings. So here you see that 37% don't agree offers are tailored to their financial situation. So how do FIs really pivot for success here? David, what do you think?
So I would recommend the following. First, recognizing that there is no one size fits all approach for servicing and also over time growing the relationship, right? Second, knowing your customer demographic and understanding their financial goals, that's imperative to developing actually the right value proposition for them and the tools that are right for them. And then third, the mobile channel has become the dominant communication of choice. Therefore, enhancing the mobile experience must take priority. Yet, I would balance that with the fact that the need to offer services across all channels remains critical. So, and as Michael mentioned earlier, when seeking help, customers will turn to digital assistants, but they may also turn to call center representatives or visit a branch, right? So therefore, providing a frictionless experience across these channels is paramount. So that kind of leads me to this concept of personalization. And we can't really talk about personalization without talking about data, right? Data is crucial for FI's personalization strategies, as it provides like the mere foundation for understanding individual customer needs and behaviors. By analyzing customers, transaction history, spending patterns, demographics, all of those things, FIs can create a very tailored set of products and services. And so this level of personalization is really impossible without comprehensive data, which that's the good news for most institution is already there, right? I think Michael alluded to that a little bit. You need the right systems then to be able to utilize the data that you already have.
And with that, let's go on to, because there's more around data or later on too. So I want to capture that and expand on it further. So challenge number 2, right? The next challenge here is, talks to how customers want a multi-channel experience yet want to be left alone. So based on this, how can FIs effectively engage and build that customer loyalty given those parameters? Michael, what do you think?
Yeah, we have a lot of conversations at Galileo here amongst ourselves and with our clients. We always say the customers don't necessarily want to talk to you, but they expect you to know them and meet their needs. So, it's really thinking about those seamless digital interactions, leading towards that long-term success. Customers want to control their low contact experience. And, as we've said, that's happening today on the mobile device and through the intelligent digital assistants. The FIs really need to think about how to use AI and enable smart automated experiences through these touch points. And I think too, if the financial providers can't leverage that and the interactions, aren't available through all of the channels, it's going to be a challenge for them to retain and or keep those clients satisfied, because as we've seen, there's a lot of competition out there. There's many financial services offerings. So, really thinking about how can they amp up what's happening in the background to, low and slowly still be on demand and ready for their end customers.
And with that, let's go to challenge 3. And this kind of takes us full circle back to the idea around everything hinges on data and trust. So it's no surprise that many people keep their money with the FI that they trust, right? So 80% of customers who keep most of their money with their primary FI say it has their complete trust. So, but trust is both critical and easily broken. So that thread to close that gap is usable data. And I know, David, you just went into, the foundational elements of using the data, and FIs are have an exceptional advantage given all the data they have within their infrastructure. Are there other data points? And you can see the data points on this slide around the elements and importance of trust. 27% don't agree their FI offers robust security features. 20% say they never log in their financial accounts on computer or phone, mostly of data concerns, etc. Right? So what else, is there anything else that you would really emphasize to this audience around this critical element of data and trust?
Well, there's also a gap in terms of knowledge, right? It's clear that there's more education that needs to take place. You know, the data is actually not stored on device, but you know, consumers don't necessarily know that, right? So education is a big component of that. But you know, I'm going to go back to one of the principles that I've talked about, right? So central to the relationship between the financial institutions and the customer is trust, right? It cannot be compromised. And so, you know, again, I'm going back to a concept I alluded to earlier around trusted financial advisor, right? Know me, protect me, look out for me, right? This is still true today. It was true 50 years ago. It's still true today. And then outside of kind of information security here and looking at the opportunity associated with data, I think having greater visibility into how customers engage with your financial services, and even more importantly, where they are not, maybe, right? It will help you, the financial institutions, to form a better customer acquisition and retention strategy. I think customer expectations around real-time data analytics and machine learning are growing. Data, and more importantly, the insights drawn from the data play a central role in enabling financial institutions to achieve this. So while I think most FI have barely scratched the surface of leveraging the wealth of data that they house within their various systems, I think it's becoming clear that now next generation platforms, whether it's core or digital, make that data easier to access and analyze. I think the word we have on the slide here, visibility, right? Visibility is key. And that kind of leads me to the need of having an open architecture, right? That enhances an FI's ability to ingest data from other systems for a more consolidated customer view. You know, this open architecture also integrate more advanced analytics capabilities. You know, they can support things like streaming services to feed real-time data and results to other systems that are actually capable of receiving them, right? So these capabilities offer financial institutions the potential to position themselves as client advisors rather than simply transaction providers. And that's a big distinction here. And so overall, with the right strategy and execution, I think a lot of institutions out there can harness data to, you know, drive efficiency, manage risk, and actually deliver differentiated value to customers.
Yeah, I think the only thing that I would wrap that in a bow with is that, you know, to get there, you know, these institutions need to think, you know, move away from those legacy systems that, you know, aren't allowing them to share the data, ingest the data, you know, quickly and easily respond to, you know, the changes, and think about the more modern core approaches to the tools that are available today.
Yeah.
Okay, so we've reached the towards the end of our conversation, which we were able to share. Hopefully, you find this very insightful. You learned some insights here that can help formulate your strategic plans. Before we officially wrap up, I really would like to ask Michael and David we've covered a lot of data here that is meant to inform our audience. But what is the one key thing that you would like the audience to remember more than anything. David, do you want to go first?
Sure. Yeah. Well, maybe I sound like a broken record at this point, but personalization is paramount, right? I think personalized interaction is absolutely vital for addressing Gen Z's needs. As you see from our research, in general, younger consumers' expectations are rising, right? They have grown up with a level of service and experience that their parents never knew existed, right? I think it's often referred as the Amazon effect, right? They expect overnight or even same-day delivery when they shop online. Their fast food delivery services know them, they know their favorite food orders, and they actually make suggestions, right, based on them. So arguably, all younger consumers are experiencing highly personalized, tailored experience adjusted to their preferences or behaviors from the merchants or app that they use on their phones. So I think they're asking more and more often, why not from my bank? And so financial institutions can accomplish this by developing insights based on all available customer data and previous interactions that they've had the customers, but they really need to build the infrastructure for this in order to do that. And by the way, this applies to all interactions, whether we're talking about digital self-service, care centers, branches, and it's throughout the consumer life cycles, right? So, and that has to be done in real time. I think this is basically what customers are expecting now from their primary financial institutions.
Yeah, great insights, David. I would only add to that. I think when the customer says, why not, the institutions need to be able to say, of course we can, or how quickly can we do that? So I think it goes back to evaluating your tech stack, thinking about that digital first approach that is going to allow you to think about meeting those clients where they want to be met, providing those value-added services, creating that extended lifetime customer value thought process. And let's be honest, it can be overwhelming. So, part of the process and all of this is speaking with trusted advisors, getting your, arms around who can help you get there, who can help you modernize your platform or your tech stack. So leverage the resources that are available to you, because some of this stuff isn't easy, but certainly can be done. And it's being shown over and over again. And with that, folks just need to think about their industry partners and trusted advisors that can help them on the journey.
So here I would like to emphasize that, learn how this research can help you retool your customer expansion strategy. Here you'll see on the screen a QR code that gives you access to the full Galileo Consumer Banking Report by Datos Insights. If you pair this research with the data-driven approach, we think this will help FIs gain the actionable strategies to help you strengthen your position with your customers as their true primary financial institution, drive stronger customer acquisition to enhance their, what I will say, life stage. As they're moving through life, how you're approaching their life stage. Offer more personalized products and services that meet their needs in the moment they need them. And then defend against digital first challenges that are taking this data-based approach and really delivering unique, innovative, and wow factored solutions that meet the demands of a modern day world in which we live. We have reached the top of the hour, essentially. I do not see questions coming in. So I think with that, I'm going to wrap this up. Many, many thanks to David and to Michael for joining me today and having this conversation, unveiling this fresh off the press consumer information that we hope our audience will find valuable. Thank you for your time today.
Thank you, everyone.